Welcome back to our podcast series. Happy to see you today, all well and sound.
Hey Barton. Yeah, all good, all good.
So, Elvi, did you want to say some few words about our today's series? This is a special episode.
Yeah, today's episode is very much focused on the Federal Reserve. I have the pleasure of listening to um, Arthur and Mario, real experts in the field, and we're going to be sort of analyzing and dissecting the major change that's happened, which is obviously the incoming appointment of Kevin Walsh. And how that's going to be affecting the markets. Arthur, Mario, maybe if you want to elaborate a little bit more on some of the themes that we're going to be diving into before we sort of really get into the meat of things.
Yeah, I'll say for myself first. Thanks for the intro. We're gonna talk about the briefly about the structure and the functions of Federal Reserve, and then we're gonna talk about how the incoming nomination could change the view of Federal Reserve as a functioning body, and how it could affect markets, and how it could affect U.S. economy and even U.S. politics in general. And Mario, any other thoughts on like agenda before we go straight into it?
Yeah, we can talk as well on how did Powell do in terms of stock market performance, which is something that Trump usually uses as his measure of success for the term. And then other things like whether the expectations for Kevin Warsh are uh, are correct or are feasible in terms of lowering rates. Um, how how does Kevin Warsh has it? Is it going to be possible or not? So yeah, we can touch on this point as well as yours.
Great. Yeah, so I'll start then. The recent nomination, the nomination of new federal chair has already happened. For the sake of clarity to our viewers, today is May 31st, and nomination happened on, I believe, May 22nd. So the way it works is that like a year before the official new chair steps into the office, the president selects candidates, and then the candidates that get approved, the president finalizes the final choice and submits that final choice to a Congress, and then the Congress of U.S. government approves the final candidate, and then he steps into the office. So that's just a brief overview. But why this nomination is important and is so widely discussed in the markets? Well, basically, the reason for that is because the Federal Reserve Chair is the official main person of contact from the Federal Reserve to the markets, and to the U.S. public and to the U.S. government. Most often in releases, market participants and investors and ordinary people see publications and official meetings represented by federal chair. And in those meetings, federal chair underlines kind of where the US economy stands, what are the key levels of inflation, interest rate, unemployment, GDP, and how the monetary policy is being shaped at that current moment of time. This is like very good summary of like how things actually change in the structure of Federal Reserve. So when the new chair gets nominated, the old chair may not necessarily be removed straight away from the office. So, for example, Powell the chair that just been presiding over Federal Reserve up until May this year. He still actually remains in the office up until 2028. So he will serve alongside new chair Kevin Warsh, but he technically remains in still in on the board, although he's not a chair of a board. So that's important consideration to keep in mind. So whilst the federal chair has a full representative power and official governance of the board, the deciding decisions are being taken as a collective vote of Federal Reserve members, which kind of presented on this slide. And Maria, would you like to comment on how the returns of market performance have been affected by different chairs in power?
Yeah, sure. So as you can see here, um, you can check where Jerome Powell has ranked amongst some of the Federal Reserve presidents. Um, so this is the cumulative returns of the Dow Jones since he took the chair until he left. And so that's a span of 8 years. And we can see that it's 96%. The Dow Jones grew during this period of time. It would be more for S&P 500 and NASDAQ, of
Mm-hmm.
course. But Dow Jones is the index more reliable to compare because it exists the first since the first Federal Reserve president.
Mm-hmm.
So yeah, it's just to show Trump that it has been let's say criticizing Powell for not lowering rates. That actually the performance of the stock market has been very average, or I would say very on the mid range or even high range. If you look at the analyzed, there is another similar chart, the analyzed
Mm-hmm.
Dow Jones returns. So he ranks on the middle spot, um, which is well very normal for a Fed president to rank there. There are many outliers like Eugene Mayer. So Eugene Mayer was a president that was for a brief period of time during the Great Depression, during 1930, between 1930 and 1933, which were the worst years of the Great Depression, and yeah, the annualized returns were, as you can see.
Mm-hmm.
And then there are other presidents which had very short tenures, like Daniel Kissinger, also was in this kind of tumultuous years of the Great Depression. Actually, I think Kissinger succeeded Eugene Mayer. So you can see that when the Dow Jones goes down a lot, then it usually bounces up very sharply.
Yeah.
But anyway, let's not deviate from the topic. Yeah,
Great.
so Jerome Power like just ranks in the middle of that. And one more point on what you said. Uh, basically, Trump basically finds one culprit for not lowering rates, which is Jerome Powell.
Mm-hmm.
But that's not true. I mean, like you said, there are 11 members on the board that have to
Yeah.
vote whether to lower rates or not, and what kind of policies the Fed is gonna implement. So unless Trump removes everyone or the majority of them, by some other guys that that do what they want, Trump won't be able to lower rates even if he changes the president. So just a point on what you said.
Just on that point, Mario, to add, how can we sort of contextualize this data? Because as you mentioned, right, Eugene Mayer, if we look at that graph, we might instinctively say, oh, what a awful president of the Federal Reserve. But as you highlighted, it was during the Great Depression. So contextualize these data, how much impact the Federal Reserve chairperson can actually have, and perhaps these Dow Jones returns that we're seeing are more just a reflection of the general economic conditions at the time. And as you've mentioned, right, we can see that Jerome Powell comfortably sits in the middle. So maybe for our listeners, we need to sort of clarify that a lot of this sort of bashing of Jerome Powell is more political posturing from Trump. Very similar. Jerome Powell is not the first scapegoat or person that he's chosen to target in his administration or outside of his administration. It's very Trump typical. So how can sort of investors and just general listeners really interpret this chart? How significant is really that Federal Reserve chairperson for affecting the real economy?
Well, yeah, that's a very good question, Elvi. I think the most important thing for me, and I've been thinking about this question. So basically, the Fed for me has to be independent of the president. Like if the Fed president is not independent, then we'll run into lots of nasty issues in terms of the dollar value and the dollar being a stable world currency. World reserve currency. Because it's very easy to prop up the market. It's very easy to print money. The Fed can do it anytime. It costs zero basically for them to print money. But what do we have if they do that? Like obviously this is not going to be free for the economy. If you print money, if you print money, basically you devaluate the currency, which is making the dollar go down in value. This obviously for the assets that keep the value. If you look at them in terms of dollars, they go up, but that's just illusionary value because the dollar goes down. But the dollar has the status of world reserve currency. So if the world reserve currency devalues a lot in value, then it's not anymore a reserve currency, right? Nobody will want it to basically keep it. Right now, we have lots of central banks around the world that they have lots of treasuries, lots of US bonds, and it forms the majority of their reserves because the dollar is the world reserve currency. But what happens if the Fed goes crazy and starts printing money or starts lowering the rates artificially? Then the dollar is not going to keep its value anymore. Maybe not in the short term, but it will show up in the long term. So when I mean that the Fed should stay independent, means that it should stay free from political pressures like Trump is trying to do. And luckily, the Fed is, like we said, is more than just replacing the president. It has 11 members that have to vote. And at the moment, Trump replaced just one of them by some time ago by one which follows what he's, but he will have to replace the majority of them in order to achieve what he wants. So hopefully the Fed will still be independent. But if not, the dollar is going to be in big trouble.
Yeah, and I'll add on this as well. it's a good summary answer. But to understand like the kind of why this is important and how it works, like it's important to look at this like kind of structure of Federal Reserve. So the Federal Reserve has kind of different functions and entities. And basically, if you look at these three pillars, the entire structure of governance, it's divided into three main parts. It's a Federal Reserve Open Market Committee. This is 7 members, plus 12 central banks governors, plus the Federal Reserve Board of Governors. Now, in these three pillars, just open this again. You could have members like sitting in like intertwining. So members of Federal Reserve governors, like they could be in the Federal Reserve Committee. Like people from here could be in this box as well. Depends on nominations, but the key is like to divide different functions, separate them from one to another, to keep the body structuring fine and independent from each other and have clear responsibilities. And as we said, like the replacement of Jerome Powell with Kevin Warsh, it's doesn't just change immediately the policy of Federal Reserve. It will take time for Kevin Warsh to implement his policies, and he will have to get approval from other members of a board as well. And this is very important for the markets because Federal Reserve is one of the most important federal boarding structure in the United States, and it's also very important central bank in the world. In fact, the most important central bank in the world, because US dollar is the world's reserve currency, and because the US economy is the biggest and most powerful economy in the world, and also because the markets and investors in general follow the US stock markets very closely. And the US stock market, in turn, very closely follows what Federal Reserve has to say about these key four things: the employment, pricing, and long-term, short-term interest rates. And on the point of independence as well, so in classical economy, and as well as like in modern economic terms, um, the entire economy is governed by the fiscal policy and the monetary policy. The fiscal policies, that's your taxes, that's your subsidies, that's fiscal stimuluses, and that is always a role of government. But the monetary policy is the policy of interest rates, where the interest rates go up and down. It's also a policy of money printing. Do we print more money through the purchases of, let's say, government bonds by the central bank, or do we sell those government bonds back to government and kind of redirect cash from open circulations back into the central bank? So that's QE, a quantitative easing, essentially, and anti-QE policies. And this has always been with Federal Reserve. Now, these two, fiscal policy and monetary policies, they are kept in separately and independently from one another. And the reason why markets, closely follow so much the nomination of a new federal chair and what Federal Reserve does in general is because the separation of duties between the government and the central bank is clear, and because any decision that is taken by the Federal Reserve like is immediately affects the markets. Now we mentioned that this graph of returns of annualized returns of Dow Jones index during the tenures of different Federal Reserve chairs. Whilst this is really interesting and important graph, it doesn't actually represent the fact that, for example, Eugene Mayer was unsuccessful federal chair. No, it could not be the case, for example. We need to look into like how economy actually felt during that time of his tenure, i.e. unemployment, the pricing, inflation, GDP growth. We can't just look at his performance tenure based on return of Dow Jones. Now, of course, you could say that because Dow Jones performed so badly during his tenure, maybe something has happened with the economy, and most likely it's going to be the right answer. Like Dow Jones usually goes down massively when something negative happens in the economy. But there could be some other factors, like maybe it was just one of one, or maybe it could be a one-off economic shock that caused a sudden drop in the stock market, and obviously it will affect massively annualized returns. But maybe over the course of longer term, the economy actually did well, and it deviated from the stock market. So yeah, this is important to keep in mind. And I see more often than not nowadays the Federal Reserve chairs do indeed start getting evaluated by their performance of the stock market because it's just so easy to evaluate. But I personally think it's not right. The performance of Federal Reserve chairs and the board members should be evaluated by how the economy feels, not how the stock market feels.
Yeah, Arthur, there's a big elephant in the room that we haven't gone through
Mhm.
in all these presidents or in this chart, which is the gold standard, right? So
Mhm.
you remember the gold standard that was in place up to 1971. That meant that the dollar was backed by actual gold, and a gold ounce on 1971, it was priced on 30 at $33, if I remember correctly, something like
Yeah,
that.
it was somewhere in this
So
article as well. I just show it to viewers.
yes, that's a big that's I think it's a key piece to understand this chart, because
Hmm.
that means that previously, when the gold standard was in place, the Federal Reserve couldn't print money so freely like they can do it now, uh, because basically there would be enough gold to back all the dollars,
Hmm.
right? So
Yeah, the Bretton Woods system,
yes,
the
so
1971. Yes.
mhm. They even they despite that, they even printed money for the World War II and World War I as well. In wars, they always print money, and that meant that they had to devaluate, and instead of um, maybe $20 per ounce that was before the war, then they put they put it up to $33 per ounce, something like that. Um, the numbers I cannot remember exactly, but there were some devaluations there, but not as it happened, especially after the great financial crisis of 2008. Um, that there was a period of low inflation, so that meant that they could basically print without limits. There
Hmm.
was no gold standard. There was low inflation. So what stopped them from printing? Basically nothing, right? So they could freely print, and this is gasoline for the economy. So they have it very easy. Um, so I think on this point, now that we don't have a gold standard, investors look very, very closely at the transparency of the Fed. All what the Fed does, because they have to believe on something. They don't have the gold standard, which is very powerful, but they have to believe on data. So that's why they look at the transparency of the Fed, and what they look the statistics, everything. Um, but looking at the Warsh policies or Warsh intentions, one of them that drew my attention, it was to basically reduce this transparency, make things more opaque, right? Uh, Now this is a bit you can
Are you
interpret
saying
it
basically
in
what he
many
said
ways.
reduced transparency, or are you more like speculating about?
No, that's something I said, and I read it. I read
Hmm.
it somewhere in after he did his press conference. He mentioned make things more opaque. Um, I, I didn't get any more detail. I'm not sure if he mentioned any more detail,
Hmm.
but that's something that it's maybe it it's more important than what people usually may think.